everyone. Thank you for joining today. So I'll jump right in and get started here so that I can try to leave enough time for questions at the end. So today's presentation is about telecom infrastructure services and navigating the post-peak 5G era and exploring some future growth opportunities as well. Just so you know, I'll be abbreviating telecom infrastructure services as TIS quite a bit. It's much easier to say. And this webinar is based on our TIS global market forecast from 2023 to 2028, which published this past month. Just to introduce myself, so my name is Mike Soper. I'm a senior analyst in the telecom practice here at TBR. I lead our coverage of the TIS market, and I also produce the animation here. Next, there we go. The other TIS products within our portfolio. So we do a quarterly TIS benchmark. We also do an annual telecom infrastructure services margin benchmark, benchmarking the vendor margins across service lines, and then we also have a North America focused telecom infrastructure services market forecast. I do like to do a little bit of a level set on some of the TIS taxonomy, so the audience knows exactly what we're speaking about here when we talk about TIS. So TIS includes all the external spend, both CapEx and OpEx, on services by CSPs. And for the purposes of this report, we're generally including telcos, cablecos, and hyperscalers when we say CSPs. And it's all the external spend on or related to communications and IT infrastructure, or you might see that abbreviated as ICT infrastructure. We then we break it down into four main segments that you can see listed here. And we also have subsegments beneath that. We'll go into some regional splits, some splits by CSP tier and things like that. One note is that the pay TV satellite companies, so think of a dish network, they're included in the cableco segment for the purposes of this report. And when we talk about hyperscalers, the spend that we're covering in this report is only from those hyperscalers, the kind of tier one hyperscalers, so Microsoft, Alphabet, Meta, Amazon, and Apple. Okay, so let's run through today's agenda real quickly. I will go through the TIS growth drivers and detractors to start. I'll also give a little bit of a history of 2023, a quick rundown of what happened in last year. Then we'll go into the market segmentation forecasts, the deployment, managed, maintenance, and professional, as well as the regional splits and things like that. And then finally, we'll look at the TIS vendor landscape, what changed in the last year, and what are some of the opportunities for the TIS vendors going forward. Okay, so let's begin. So last year, you'll notice there was quite a bit of a drop in TIS spend. It was a post-peak 5G investment year, and that was largely due to the decline in 5G deployments in China and the US, primarily the US. And this caused a big decrease in deployment and project-attached professional services spend. We did see some of that decline mitigated by the aggressive 5G builds by Indian operators, Bharti Airtel and Reliance Jio. But even those highly accelerated, aggressive rollouts for 5G RAN, they couldn't offset the decline. And by the end of the year, we also saw the Indian operators begin to spend less and less on TIS as the year wore on. In 4Q, in fact, that spend started to decline. And so because of these negative trends, we're going to see a further market retreat in 2024. Though we will start to see some growth in 2025 and 2026, as a lot of the government stimulus aimed at bringing broadband internet to unserved and underserved areas drives much higher or a bit higher TIS spend. So that's really, with that, I can get into some of the growth drivers that we see over the course of the forecast period, which one runs through 2028. So I think the main thing to talk about here is the fiber access deployments, which is kind of working in tandem with a lot of the government stimulus. And this will be a theme we hit on throughout this presentation, especially in the US, where you have the BEAD funds coming online, likely starting in the second half of this year. Um, and those BEAD funds, tens of billions of dollars, going to the states, which will then disperse them to the CSPs, which will then pay the TIS vendors to roll out primarily fiber access to provide broadband speeds to rural or suburban areas where there is not, they don't have access to the broadband speeds right now. So while most of this spend will go towards fiber access deployments, we'll see a little bit go towards fixed wireless access, but that's certainly getting short shrift in the marketplace right now. We can see most of the states and most of the CSPs, they're much more interested in deploying fiber access, which is viewed as future-proof, despite its much higher cost to roll out. So those two things are working in tandem, the government stimulus and the fiber access deployments. We're also seeing government stimulus for other things, though. So again, just to look at the US, where a lot of the government stimulus is coming online, there's billions of dollars out there to rip and replace equipment from untrusted vendors, Huawei and ZTE. In the tier 3 CSPs, a lot of them are mobile players, very small mobile players, serving largely rural markets. And so $2 billion have been allocated so far, or appropriated rather, from the US federal government to rip and replace this equipment and replace it with equipment from, either a Samsung or an Ericsson or Nokia or what have you. But the problem going on here is that there are still $3 billion needed to close the funding gap. These tier 3 operators need roughly $3 billion to be able to fully rip and replace the infrastructure coming from Huawei or ZTE. And that money has not yet been appropriated by the US federal government. We do expect them to do that at some point this year, but right now it's kind of up in the air. I'd like to hit on a couple of the other growth drivers here. So we're seeing some more 5G rollouts in developing markets. There's some happening in the Middle East. There's more and more happening in Southeast Asia. But these deployments are not really enough to offset the decline in the big markets that have already rolled out 5G coverage for the most part. So that's China, India, and the US. And then in Europe, we're not seeing a kind of mass deployment of 5G. It's happening more on a piecemeal basis and not a mass rollout like we saw in the single markets like India, China, US. And then for Open vRAN, this is having a kind of understated impact on the market right now, but we do expect it to ramp up over time. So what we're seeing is Open vRAN being done not on a multi-vendor basis. We're seeing much more single vendor Open vRAN being deployed by CSPs right now, especially in the brownfield environments, on a mass scale. On much smaller scale, there are a few, a couple thousand towers here or there, deployments of Open vRAN on a multi-vendor basis. But that's not driving too much TIS spend. But we do expect that to ramp up over time. One other thing that's not written here on the page just for space purposes is the digital transformation related projects that the CSPs have been undertaking over the last few years. We've kind of seen a pause in spend on these due to some macroeconomic issues that are going on in the market. But we do expect these digital transformation related projects to receive an increased amount of spending during the course of the forecast period. They'll start ramping up again, we think, in 2025 as the CSPs kind of get their feet under them after managing cash on a more tight basis in 2024. We'll also see them investing more heavily in AI over the course of the forecast period, integrating AI into their operations, which would be part of digital transformation related projects. So as I mentioned there, so one of the growth detractors is macroeconomic issues, and kind of rolling up into macroeconomic issues, I'm talking about economic stagflation, interest rate normalization, which has restricted access to capital for especially the smaller CSPs. So their inability to get cheap capital is hindering their ability to upgrade their networks on a timely basis. And so that in turn is hurting their spend on TIS and causing a decline in the market right now. We're also seeing a lot of CSP restructuring, consolidation. So there's much more zero-based budgeting going on. We're seeing the tier ones increasingly acquire the tier twos and tier three CSPs in the market. And that is shrinking the need to build out new networks, upgrade existing networks, and just ingesting these companies puts a pause on some of the other upgrade projects that might have otherwise been happening. Next, decommissioning, certainly a huge impact on the maintenance services market. We're seeing legacy infrastructure rationalization and decommissioning across both mobile networks and fixed access networks. Decommissioning will ramp up over the course of the forecast period, especially as governments and CSPs increasingly deploy fiber across their footprints. So as they deploy the fiber, we're going to see much more copper retirement. And then as 5G gets deployed, we'll see more and more 3G networks being decommissioned. And that cycle has really already started happening. We're seeing many more 2G networks kind of survive this decommissioning cycle. And that's due to the underlying need for those networks to provide voice services, and a lot of them have quite a few IoT connections still on them. But as those subscribers are migrated to LTE and 5G networks, we're going to see an increased decommissioning rate for 2G networks as well. And lastly, cloud automation and AI here listed as growth detractors. That might be a little counterintuitive, but certainly we'll see operators start to use AI and automation and cloud more for their network operations as well as customer service functions. So we're going to see CSPs require fewer human resources, which will continue to cause a decline in training spend, which is a TIS offering, as well as lower spend on network maintenance and deployment, as a lot of these things get much more automated over the course of the forecast. Okay, so let's speak about the services segments. So we have deployment, maintenance, professional, and managed services listed here. So I'll try to do a quick deep dive into each one of these. So deployment services market is quite post-peak at this point, with the big market 5G rollouts that I've mentioned being largely concluded. But it's going to receive a short-lived boost from the government-funded fiber access deployments. So with both, so government funds from the BEAD program in the U.S., they will support fiber access builds to bridge the digital divide through 2028. We expect spend for BEAD to really ramp up in the second half of this year, and then cause the deployment services market to actually increase next year and in 2026, just slightly, before leveling off in 2027 and then beginning to decline in 2028. We're also going to see some 5G RAN projects in developing markets drive deployment spend volumes. But as I mentioned before, this is not going to happen to the extent of the mass deployments in China, US, and India. These 5G deployments globally, they're also spurring quite a bit of spend for optical transport, front haul, mid haul, and back haul, especially as vRAN is increasingly deployed, as well as for the core network. These are contributing to growth in the middle years of the forecast period. We've seen the CSPs defer their 5G core investment as they haven't really seen a clear path to a return on this investment. And kind of follow-on effects from the delays in 3GPP standards that have caused the new features for the network not really to have been rolled out. So over the course of the forecast, these issues will be resolved. We'll see more CSPs deploy 5G standalone. And lastly, another thing weighing on the market for deployment services, the consolidation and the improved installation economics that we see happening with multi-vendor open vRAN. So while we certainly expect multi-vendor open vRAN to cause increased spend in the professional services systems integration market, in the deployment services aspect, there's going to be lower spend. These white box hardware should be much more simpler to install, and we expect spend on that services sub-segment to decline over the forecast. Moving on to maintenance services. So as I mentioned, we're expecting the maintenance services market to enter a gradual decline in 2025. And this is really occurring because there are several underlying trends in the industry that are going to be highly disruptive to maintenance. Now, mostly this is the infrastructure decommissioning, as I went into already, but also the consolidation among CSPs will cause decommissioning of other existing networks. And then we're also seeing the effect of automation, AI/ML, and the shift toward more efficient network architectures. So new network architectures that employ cloud, virtualization, more white box hardware, things like open vRAN. This is going to have an increasing negative impact on maintenance spend during the forecast period. And so this is going to cause the declines within this market to intensify over time. And you can see that the green line on that graph, the decline in the rate of maintenance services spend. Just to hit on professional services, so we expect this to be the fastest growing segment in the TIS market, and this is largely due to the ongoing 5G builds, digital transformation projects, and the introduction of more complex technologies into CSP networks. So there are a couple things going on here. First, there's going to be densification happening in the US, China, and India, and then the coverage in developing markets for 5G. We also see CSPs reinvesting in digital transformation more starting next year as they kind of spend heavily with IT services and systems integration firms, trying to increasingly leverage that AI/ML and automation to optimize their own internal spend. We're also likely to see some scale deployments of multi-vendor open vRAN over the course of the forecast period. The complexity of this technology is much higher than projects leveraging just proprietary single vendor RAN and legacy network builds. So we're likely to see much higher levels of systems integration spend. One area of the market that we do see being post-peak in professional services is the network infrastructure integration. And that's because NII, just to abbreviate it, moves largely in step with 5G deployment timelines in many of the large markets like China, India, and the US that we spoke about. Just to talk about the managed services market. So what we're seeing right now is a short-term decline, which we expect to be followed by a period of growth especially as outtasking starts to outweigh the weakness in the network outsourcing market. The network outsourcing market we view as in sustained gradual decline. Vendors are not very interested in taking on traditional network outsourcing agreements. They are much more cautious about what kinds of managed services contracts they take on now, to make sure that they are managing risk appropriately and have a path to profitability in these engagements. And so this is causing some CSPs to re-insource some of their network operations or outsource to lower cost third-party vendors. This is also causing them to engage in outtasking, and we expect growth in the outtasking market during the course of the forecast period. Outtasking, the CSPs are usually looking to get some cost savings. They're often undertaking outtasking engagements as part of digital transformation initiatives. And a lot of the outtasking is taking place in the OSS, BSS, and the security markets. And we're seeing some pretty good sustained growth from some of the key OSS, BSS vendors like Amdocs or CSG systems. We're also seeing vendors, as part of outtasking agreements, provide CSPs with access to new subscription services that give them enhanced insights, especially via AI, analytics, and automation. One area I do want to highlight in the managed services market is the IT outsourcing, which is separate from network outsourcing. So we do view the IT outsourcing market as having some very favorable trends. Again, this is a cost savings play for the CSPs. They outsource their IT environments. They're able to focus better on their core businesses. And this has been a boon over the last few years for companies like Accenture, Tech Mahindra, TCS, and Infosys. There has been a slowdown in spend on the IT outsourcing segment for CSPs, but we do expect that to reemerge as a growth area next year. Okay. To talk about the different CSP types, so we break it down by telco, cableco, and hyperscaler. So to talk quickly about the telcos, we've largely talked about many of the trends that are affecting them at this point. The market is post-peak as the India, China, US 5G coverage builds are largely done. And the tier 2 and 3 telcos in the global marketplace are spending less and less as they get either consolidated into tier 1s or just run out of access to capital or enter bankruptcy proceedings or otherwise just kind of hunker down and manage their cash positions. That's really what's weighing on this market. There's certainly going to be some temporary band-aids over the course of the next few years with government funds coming in to replace infrastructure from untrusted vendors and bridge the digital divide, as you mentioned. For cablecos, we are looking at another post-peak market here. Cableco TIS spend is going to kind of languish through this year as they're still in a downturn in spend following upgrade of wireline networks to DOCSIS 3.1. Eventually, or even now, they're starting to deploy DOCSIS 4.0, and that will ramp up over the next couple of years. At the same time that cablecos ingest funds from the government to help build out the broadband networks to unserved areas. But again, this is just a temporary band-aid for these cablecos. This market will also be weighed down by consolidation among the smaller players as they get rolled up into larger ones. One thing that's not happening in the cableco segment, at least not happening to the extent that had previously been expected, is in the US anyways, the Charter and Comcast cellular network ambitions. They've been delayed at this point, if not entirely abandoned, but we certainly haven't seen their previous ambitions manifest in the way that they had talked about, year ago, 2 years ago. And finally, the hyperscalers. So we do see access layer spend by the hyperscalers beginning to ramp, especially over the course of the forecast period. But largely, their TIS spend is underpinned by investment in optical DCI technology. We do expect some of the hyperscalers, so their investments in the access domain include things like Amazon's Kuiper, and Alphabet, which has started to expand its Google Fiber investment again. Okay, on a regional basis, I am running a little bit short on time here. So in North America, we're looking at TIS spend to return to growth in 2025. This is heavily supported by the US government funds, especially for bridging the digital divide. We also are seeing things like FWA rollouts. That's helping to support the market, though on a much lesser extent from a volume perspective, as well as those funds for ripping and replacing the equipment from the China-based vendors. In Canada, just to mention them quickly, they trail the US in 5G deployment, but their 5G coverage deployments are ongoing. So those support the market over the course of the forecast period. And there's also some other things that are helping the Canadian market, such as Rogers' acquisition of Shaw, where they had to make certain investment commitments to bring coverage across the country, as well as some investments from Videotron, which acquired some of the assets as a part of a separate transaction from Rogers acquiring Shaw. In the CALA market, this is kind of a tough one to crack because it'd be set by some macroeconomic and other non-industry related challenges. They also have CSPs there. They aren't really seeing the ROI for 5G, so they've become hesitant to invest. They also don't have a huge incentive based on competitive reasons to invest in 5G on a significant basis. So there's not a huge demand for these services. So they're having trouble deciding to invest in 5G. In EMEA, what we're looking at in Europe is a market that's likely to rebound in 2025. We expect some of the CSPs that are trying to consolidate to see some more clarity on their proposed acquisitions. And we also expect the delays in spectrum allocation to resolve themselves over the next year. The market's also going to be aided by government support for swapping out gear from China-based vendors, and even swaps that are not supported by the government need to happen in markets like Portugal, Germany. So we're going to see some more spend there, going to some of the Europe-based vendors and going away from the China-based vendors. In the Middle East and Africa, we're looking at MEA economies that have kind of been negatively impacted by some of the economic and political issues in the region. We do expect growth over the next 2 years of the forecast period. There are some 5G rollouts that are persisting in the more developed Middle East countries, as well as South Africa. And then we expect these 5G rollouts to spread to less developed markets. In APAC, China has entered to sustained decline after their mass coverage 5G deployments. And we do expect their spend to hold up relatively well, however. They're kind of embarking on an unprecedented densification initiative. The CSPs in China have already deployed about 3.5 million 5G base stations, and they expect to deploy another 3 million more over the next 2 years. So we do expect spend to hold up pretty well. This is really only impacting a few vendors, however. We're talking about Huawei and ZTE, as well as China Communication Services. In the rest of APAC, the developed markets have pretty much finished their 5G coverage deployments. They are spending on densification and digital transformation. They're starting to invest much more heavily in 5G core and vRAN. That's especially happening in Japan. And then we're going to see developing markets in APAC increasingly deploy 5G during the forecast period. We expect the developing market spend intensity on 5G coverage to come mostly between 2025 and 2027. Okay. From a CSP tier perspective, the tier 1 CSPs are the only ones with the positive growth CAGR over the course of the forecast period. Partially that is because tier 1s are able to better afford network upgrades. They're still able to access capital. They're much more profitable. They can get better interest rates on debt. And then tier 1s also include the hyperscalers that we track as part of this forecast. So they obviously they're in very healthy balance sheets. They're able to afford upgrades in their networks as well. And then the tier 2 and 3 CSPs, we spoke about that already, but a lot of these companies, they're becoming much more marginalized, especially over the course of the forecast period, and especially towards the end as the BEAD funds wind down in the US. So as those funds kind of come out of the market, those companies will be increasingly consolidated into the tier 1s. Okay, lastly, we'll talk quickly about the vendor landscape in the market. Again, so the vendor landscape is covered much more in depth in our TIS vendor margin benchmark and our TIS vendor benchmark, the latter of which publishes on a quarterly basis. But in 2023, we saw geopolitical issues continue to drive some market share changes. Huawei and ZTE lost share in Europe and India, largely due to political and security reasons. And then they continue to gain share in China. We did see the collapse in the TIS revenue from CSPs in the US led to quite a bit of market share contraction for Nokia and Ericsson, and to a lesser extent, some of the other suppliers that aren't listed here, companies like Samsung. But we do expect these companies to be able to capitalize much more on opportunities outside of China over the course of the forecast period, as more and more Western-aligned countries begin to ban equipment from China-based vendors, not just in their mobile networks, but also in their fixed asset access networks, in their optical backbones, in their core networks, of course. And we're seeing that, at least in the first half of this year, we've seen activity in a few European countries, Romania, Portugal, Germany. They've essentially banned or heavily limited the use of infrastructure from China-based vendors in their 5G networks. So that's going to open up a few opportunities for our Western-based vendors, Ericsson, Nokia, Samsung, as I mentioned, Ciena, Cisco, and Juniper as well. Okay, and with that, Haley, we can open it up for Q&A.
Awesome. Thank you, Mike. Thank you, everybody, for joining us today. If you've got questions, please feel free to put them in that Q&A box for Mike to get through.
One of the questions we have here is asking if I can deeper dive into what we expect to happen in Europe over the course of the forecast period. And so one of the things I mentioned was that we're likely to see some more clarity around the proposed M&A that's happening on the continent. And maybe that sounds like optimistic thinking, given the problems with Europe's regulatory environment and how it's been somewhat hostile to the incumbent telcos over the years. But based on some of the commentary we heard at Mobile World Congress, there seems to be some momentum and unity among the telcos to really push regulatory bodies to speed up and remove the hindrances that are, hurting spend volumes in the market. And so a lot of that is regarding M&A. So we do expect there to be some more consolidation. We do expect there to be some more spectrum allocation over the course of the next year that's able to beef up some of the spend from the CSPs. We're also likely to see governments injecting funds into the market. There's a push to bridge the digital divide across several countries in Europe. And the CSPs are also likely to make a bigger issue of governments that have required them to remove equipment from China-based vendors, but have not put up the funds to do so. And so if governments really make that a geopolitical priority, they will fund that activity.